Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up, and this is for Monday, and we're at the 13th of January, 2020 at 5:17 p.m. Central Time. Now, it's an exciting day. I released half of my upcoming Spider ETF videos. I think I got into the gold section where I stopped. Tomorrow, everything will be done. We're doing it for timing, figuring out little nuances with it. If you're not a paid subscriber of mine, you cannot see that video. If you are a paid research subscriber, all you need to do is go to our website under Ira's Market Research. It's already posted for you. It's the same user ID and password that you have for your other research. So that one is up and going. All right. The big event, and I think you know it, there's two events coming at you very fast right now. Whenever Miss Pelosi's going to deliver the impeachment, and I was looking to see when the president was impeached. I think it was December 18th. She's waited quite a while. Now that she can't get her way, is she going to deliver it to take away the president's great day of Wednesday when the U.S.-Chinese first phase of a trade deal is signed? I don't know. She may do it tomorrow. She may deliver it Wednesday. I'm sure the Senate will not begin on it the day they get it. That'd be my guess. They'll do it the day after, begin the trial, and they'll set the rules and what they're going to do. I have not even heard an announcement yet as to who's going to be the personnel that Ms. Pelosi chooses to represent the House in the case. We'll get to that. And of course, the Chinese trade deal is a big deal, and we'll see where you go there. Today you had a stock market, and this is the evening trade. Remember, we're already in the next trading session. You can see they're all up on the day. In the gold market, while I'm showing you the Feb right now, the charts I'm going to show, I've already moved to the April. So be aware that that's coming for you. Bonds and notes fairly stable tonight. Energy's got smashed today again. And the question is, are they getting down low enough to find their support? And I'll cover that in the financial video after this. Suffice to say, it's the first trading day of a new week. The market is down $11. And for those of you that like my special metal reports, my gold report is still up. It comes off, as I understand it, tomorrow. This break fits right in with what I was talking about in the report. So I am not surprised at all. This is something I was expecting. And in the report, you see what I'm expecting next. But the market peaked out on Missile Day. That's what I'm going to call it, Missile Day. Market got up to 1620 for the first time, cleared the 1600 level in a long period of time, came back to fill the gap, and has basically just gradually ground itself to somewhat lower levels. The trend in the April gold, for the moment at least, is down. You have a pattern of lower highs, lower lows. That's bearish. What would negate that is getting over the 1570-30 level. You are over the 18-day average of closes, so the bias is up. When I look at the Bollinger Bands, the resistance now is the 1596.5 level. Remember, the market will trade within these black bands 95% of the time. Getting over those bands and coming out of a wide pattern like this can be done, but more often than not, it's from the sideways tight bands that happens. You don't have that pattern any longer. So this area is going to be a hard area to get through anytime soon, barring a new world environment of a war, whatever it would be. But with the patterns we know right now, with detente going on to a degree with Iran, okay, at least the missiles have stopped flying, right? We have lower highs, lower lows. All right, so you've got a downtrend under the lower Bollinger Band. More important to me is you lost the embedded reading. And when you lose an embedded reading, I know traders don't believe in that, I do. When you lose it, momentum leads price more times than not. And when that occurs, it's telling you price wants to retreat. And one of the targets might be the closest of a key moving average. Now, if you take a look, you had a bullish crossover on this day. That was last Tuesday. It seems so long ago, January 7th. Today's the 13th. Often that leads to a new high. You certainly got that, new high on the move, that is. And the market also gave it up that day. Now the price is acting like, at least price is acting like it's being drawn to this magnet of the 18-day average. Does it have to get there? No. More times than not, that's the goal that it sets for itself. In GLD, let's go to Friday's action. You still had your embedded reading. I think you can see that all the way through here. It was lost today. Now, the only time you can get it back is the day after you lose it, which would be tomorrow's session. I can't say tonight's. What I can tell you is the swing line is now in a downtrend. The momentum's lost. If it stays lost tomorrow, just like in the futures, I would look for price and the 18-day average to make an attempt at a run at each other. In order to get me thinking different, got to take out back 146.99 and immediately re-embed tomorrow. That would be interesting. We do know that there's an event out there, the impeachment, that's right in front of us. That's one thing. I don't know what's going to go on down the road with Kim Jong-un. That could be something out in North Korea. And I don't expect that the Iranians anytime soon are going to do anything. They have their hands full with the fact that they have admitted to shooting down that Ukrainian airplane in the protest on the street. When you look at Feb gold versus March silver, now pretty soon I'm going to get rid of the Feb and go to the April gold. But for the time being, we can stay with the heavier volume contract, which is the Feb, and it still is favoring gold over silver. That's when you're over this red line, the 18-day average of closes, it tells you where the bias is. When you come to the GDX market, you see you've had lower highs, lower lows. This is a market that when we were here last week and we had an embedded reading, if we take a look, did it ever, I'm looking at this one, I've got the wrong one here, right here. Did it embed is the question. You got both numbers over 80. They weren't there over 80. They weren't there. It was just an overbought market is my point. And this is where you ended up on Thursday. Now, if the market's going to drop back, the reason I so often go to Thursday is my Friday updates are a weekly, so you don't get to see these daily charts. Then the 100-day average is the next target. The market comes back up on Friday and breaks down right to that number today. That's the point I was just trying to get to you. That's your next support zone. If it wanted to fall apart from here, then wherever that Bollinger Band comes in could be that target. When we come to the juniors, it's very similar action, except the juniors are stronger than the full GDX, because these numbers, which are the 100-day and the 45-day average, are very far away. I would expect that they would stymie the break of those juniors down to the lower Bollinger Band. By the way, all of these charts will be in my ETF video. So remember, I'm going to start off with spiders, then the ETFs. We've already done all the spider sectors. Then we move for you into the we'll be into the QQQs, the SPYs. I've already done them all. So tomorrow you'll get a full video. Today was just a run through for me, and I wanted to just see where I'm headed. Here you're coming down. So now in the silver market, downtrend. Lower highs, lower lows, countered by the fact that you're over the 18-day average of closes. You have divergence all over this chart, and momentum pointing down, no longer in an overbought area, lost the embedded reading. Would not be surprised if price and the 18-day average make a run at each other, and that is the zone I'm going to look for the support, somewhere between there and the 100-day average. Close under both of those, and I have to go back to the drawing board thinking lower numbers. Dr. Copper, going up. Why not? You got a big event happening. We're signing the U.S.-Chinese trade deal. The world's got to look at copper, that's what I'd be thinking, from a friendly point of view, saying to itself, okay, if Europe can come online, parts of Asia can get back, there should be demand for the copper. Maybe. You know, you always hope that's going to be the event. Higher lows, higher highs on Friday. The market finishes 281.35, just over that 18-day average of closes. So it's got a bullish bias by 0.3 of a point, but it's got it. The trend is up. Target would be the upper Bollinger Band if it can extend itself. It extended itself to hit it. It's immediately overbought. But these are your first signs that the market in a long time, from back here at the very early part of December, when again we had talk of the Chinese trade deal, is clearing that hurdle. Trying to get back down to those old lows in the 250s, that's going to be, you'd need this whole thing to fall apart, in my opinion. In the platinum market, So the platinum's had a pattern of a lower low and a higher high. It hasn't been able to come out of that. It is working off, present tense, working off an overbought condition. When either number of the stochastic are over 70, the market's overbought. That's where you're at. Bias is up, no trend that I see at work. The palladium market's got your embedded reading. It's kept it now for a while. Higher lows. It has done its job of getting back under and staying under the upper Bollinger Band, but I just don't see anything at all bearish on this chart. I see the bulls caught in the market. If you lose the embedded reading, yes, I'll get back into the mindset that price and the 18-day average can make a run at each other. Until it occurs, I'm in the bull camp. And in the dollar index, has the dollar had enough of a rally here in front of the U.S.-Chinese trade deal now that the missile day is run to stop? Is it going to continue on? Let's assume it continues because the trend is up. Next resistance, 97.36. Can it overcome being overbought? Well, to overcome that, it's got to embed. It's not done that. It's just plain overbought. So I'm looking at this as an area the traders are starting to look at as a double top formation possibility. It has been a hard market over the past 1 year if you wanted to be a longer term bear. I'm longer term nothing, so I don't care about that. As a trader, the market moved out to the upside in this day when it got over that high, and then it activated the buy on a close over it, and it's never really given you an area that's had a reasonable dollar risk as far as I'm seeing as a trader, but the trend certainly to the upside. You know, I talk about this and a heck of a lot more in my morning research, so I'm going to repeat what I said at the beginning. My Spider ETF video, and I'm going to be doing these daily, is now available for free only to my paid research subscribers. So if you go on our website, you should be able, under the word research, be able to see Ira's Spider videos. Click on them, away you go. Enjoy them. I'm working my way through them. I'll let you know when they stop being on the free trial. For the rest of you, that'll come later. I don't know the day yet, but I'll let you know when that's coming. I just want to work this all through. But for my normal research, remember, normal, I'm now going to have different things. So I've added to my arsenal spiders and ETFs. It also means in my metals video, I'm going to be removing the GLD, the GDX, all those. You're going to have to move on to have both videos when the free trial is over. Otherwise, one's going to carry one area, the other. I want to keep them separate for the time being as we work out all the kinks in what we're doing. But I'm already having a ball doing it, so it should be a lot of fun. To get a free trial to my products, not yet the Spider ETF video, go to www.iraepstein.com. On the bottom right, you'll see free offers. You can always click here to get that. And again, if you have any questions, friends, just call my staff during the day. They will help you. But let's see where we go on these metals, and let's get this U.S.-Chinese trade deal signed. I'm Ira Epstein. Have a good day.